Hi, it's David here with Future Trading. I'd like to welcome you to the channel. Fate watch you here. I did not pay for any likes, views, or subscribers. All of the thumbnails you're seeing is of the chart that I actually went over, and the videos are in real time. So I'm reading price action. The action word means progression. So there is no still charts, and I'm reading price action. It means progression. So I have to read the chart while it's moving. Really key. Now, if you're new to the channel, this is a must watch list. You can take in all of this information should you want to do so. If you've never traded before, I definitely suggest you start here. I want to go ahead and tell you start there. Universal threshold, how far the bar will pull back and then resume. Price action trend, you don't have to have prior structure breaks in order to get a trend going. The universal price action method, a bar and a bar and a half. You're looking for majority principle. Now I'll give you an idea of what that looks like. Universal chart scale from left to right. I'll teach you that the market can turn in front of you unless you plan on blinking for a really long time. Watch that hard right edge and I'll show you pretty much where the market will turn. I've been showing you the DTT suite in the last few videos, and I'll touch on just a couple of the indicators in this one to help you with chop. I have you know, and I've said it before, that the market is always trending. It is. The problem is your target may be a little bit outside of the scale in which it wants to cycle, but it's always trending. So your target may be the issue, or potentially where you're entering could be a problem as well. But the market is always trending. I'm going to show you chop on a 1 minute chart, okay? Because I know that's the reference point. Chop is the reference point. So I want to make sure that I show you the chop, but I want you to keep in mind that the market is always trending. Your target may just be outside of the scale of the rotation. All right, just want to say that to you. Now, this is what I think about markets. All right, the traders taught to believe that the market is random. You can read the rest of it. I teach people how to read the market like literature. So from the title until the last remarks, the author will always make mention of what the literature was about. Okay, I want to go ahead and tell you that this is what we're looking for in the chart, the majority principle. And it's like gravity. If you're 70 pounds, 700 pounds, gravity is still going to work. Well, whenever you pull up a chart, you need to be able to identify where is the majority in the chart. I've been trying to cover that on the channel with the universal price action method. And of course, I'm going to try to get to it in real time before the market actually closes. But I want to draw your attention to this information here, which is, again, majority. It is. But I want to draw your attention to this, all right? The highs and the lows. I want to draw your attention to that so we can kind of make sense of some of the chop. I'm offering all of the indicators. Now, this is not all of them. This is only ones that I felt the need to list. But I paid over $200 for this functionality of this price line. I don't want you to have to spend a lot of money for one indicator. I want to give you well over 50. It's like the information on the channel. I don't know if you again have been here before, but if you haven't, I'm offering universal information that can be applied to any market, any time frame. So I want to give you some tools. I'm trying to do something to help change the YouTube experience when it comes to education, and tools are a form of information. So I want to give you an opportunity. That's all it is. If you want some additional information at a feasible alternative price, I don't want you to spend hundreds and thousands of dollars just trying to get some, I don't know, indications. That's all they are, indications, something of reference. So I want to offer you something that's reasonable. All right. So it's like having me over your shoulder telling you that that particular trade should work out. That's all it is. So I'm giving you all of this information for 200 bucks, and it's a follow the plot process. Put it on the chart, use a little bit of deduction over time. You'll figure out why these signals are working. So I'm not going to be doing a whole lot of Q&A about the code. But again, I paid over 200 bucks for the functionality of this price line, and I built the rest of this information, and you can have it. You can have it. I'll give it all to you. All right, so I just drew a couple things on the chart because I want us to focus on just a couple of these indicators. I do have a couple of others that deals with chop or wicks. I do have a couple other indicators, but I wanted to put these two up here because I've touched on this just a little bit on the channel, and I want to put a little bit more context to it now that I'm covering the universal threshold. So this should help you even more with this approach. This is what we're trying to get to happen. All right, so we're trying to get that to happen. I just showed you the diagram of it, but I put it on the chart so I don't have to go back and show you the diagram. The bar, the threshold is this. So you have a bar, whether it's a down bar or whether it's an up bar, the threshold would be here. Now, I'm not going to give you the specs, but typically price would drive into that threshold and then take off. Okay, that's what it typically will do, or it'll drive into that threshold and then it'll take off. Typically, that's what it would do. Now, again, we're looking for this. Now, this is another scenario, and I have the C's. You'll see C's in here. Okay. That's dealing with the bar getting two closes above the high of this bar, or two closes beneath the low of this bar. So it's not required that it has the higher lows or the lower highs. It's just I wanted to give the two closes above the bar's high. Okay, so you're going to see a C. There's a C here because these two bars here, that green one and this red one, closed above this bar's high. No gap needed. You don't need that. All right, it's really simple. They leaned back into it with this green bar and then popped out of it, leaned into it again, and then they, pushed up to the upside. So I'm trying to give you an alternative should this not be there. That's all. Now, with this scenario, that's what I'm drawing the zones with. All right. Now, this should help you with chop. I'm purposely doing this because I know the market is going to be closing. Okay. So there's a little less volatility than normal. And so this should help. Now, everywhere you're seeing the L or the H, which that indicator is this one. Okay. The one with the C is this one. Wherever you're seeing the L and the H is this indicator. All right, it's this one here. The highs, okay, they're lower. Okay, they're lower. They're lower. That's all they are. Okay. Now for the L, they're higher. The lows are higher and the highs are lower. Okay, I want to say that to you. So we're getting that threshold. We're getting the threshold, which again is this diagram here, and we're projecting that. That's all we're doing. Every time you see the L or the H, we're grabbing the threshold of the red bar for the decline or the green bar for the increase, the move to the upside. Okay, so we're looking for it to move to the up, so we'll get that green bar and project it forward. Now here's my thing with the H's and the L's. You kind of want the the green bar to be fairly immediate. You don't want it to come in later. That's not the preferred way of going about it. Now that's a caveat I want to put in front of you. It's not to say that it can't show up that way, but you just would want it to be first. Like, hey, stop the market. Let's see the buyers come in. Stop the market. Let me see the sellers come in. You want it to be first. The sooner it shows up, the better. That's how it works. Because remember, it's all about majority. Okay, it's all about the principle of majority. So we want to see majority of the activity of kind of absorbing the minority, because the minority is compelled, it's forced to follow the majority. That's why we want majority on the chart. We want to look for it. All right, so everywhere you're seeing the green bar, if there's a green L, you'll see a green zone for the most part. Now, if you're seeing a blue one, that just means they didn't offer anything, no kind of push in that direction, no kind of just came right back and blew right through it. Okay, that's important. That's important. I want to tell you that. That's important. You'll see why. All right. So here they close beneath this first green bar. They close beneath that threshold. That's bad. Closing beneath the threshold on the reversal is bad. That's not good. I want to tell you that. Absolutely not the thing to do. We don't need that to happen. And so, of course, they came back and they fell right through it. Up here, here's the H. They kind of reached up there and then they fell back into it. Now, I'm going to just kind of scroll the chart forward and you can take what I just said and just begin to look at these zones. I'm not going to dive into every example here because I want to try to get to a little bit of that real time and see, can we spot some of this happening in real time. But notice you had the buy zones forming here. Okay, so wherever you're seeing the blue, they didn't test it and give you any kind of gain. Okay, they didn't test it and give you any kind of gain. Here, they fell down in here. The only reason why I colored this blue is because they closed beneath it. Okay, they closed beneath that threshold. That's a problem. That's why I colored that blue. Okay, that's why I colored it blue. But they did. Okay, let me kind of push this forward. They did offer you a push into it and then moved up. But the rule I want you to keep in mind, if it takes out that threshold, don't be interested in taking that direction. That can cause a problem moving forward. Okay, I just want to kind of make sure I lay some context there for you. So yes, it did fall back into it, but again, it came back and it blew that low. The response was a little bit different here. Okay, so they came into it, kind of lifted up again. They just didn't want to get back up. All right, so now the green zones are here. Now I want you to see the behavior. And we're looking for the zones, the threshold. We're trying to pair the threshold. We want to pair that threshold with this scenario. Okay, so this should help with chop. We want to pair that threshold with those scenarios. This is an additional benefit while the market is trying to get on its way. So that's why I put that there. So while it's trying to get on its way, I put the C's there to kind of help you out. Okay, so it can, try to go ahead and break down. But the most significant thing I want you to hold on to is this one, all right? The H's and the L's. So you're seeing the green zones here. You're not really getting anything on the way down. They're giving you the green, the L's with the, with the scenario, with the three lows being higher, but they're not offering you anything. That's a problem. Now, you get the decline, clearly you get the decline, and they can overshoot. And here's another thing, and I'm going to show you another example of this, but this is a turn where they gave you the H. They kind of poked their head right above it, but they never closed above your threshold. They never closed above your threshold. I'm going to show you another example of that. Here's a scenario where they overshot the H, but they never closed above your threshold, and they turned. Here's another example here. Here's another example right here where they overshot it, but they never closed above your threshold of your H. Okay, and then they began to break itself down. All right, so now we get down here to the bottom. Now I want you to kind of pay attention to what's happening, because see, up here we were getting the green zones, and there was somewhat of a response when we dove into it. Here's an L right here. They dove into it. They popped up. There's some response there. I know they eventually closed beneath it. Okay. And again, I told you that if they close beneath the green bar with the zone, they can run that L. They can run it. And they wind up running it. Now, but notice how there's a change. Okay. So now we're getting H's down here, and they're not, regarding them. They're not willing to pull into them and begin to move again. Okay. There's a behavior to this. All right. They're not willing to break down. You're getting the H's, but they're coming in late, and that's another thing. The first one came in early, which is fantastic. Okay, and they both showed up. The H and the C, they both came in on the same bar. That's really important. That's really important. But they pulled up to it, pushed down, drove down, but they closed above it. Okay, they closed above that threshold of that bar, got up there and rotated down, came right back into the threshold of this L here, and then they went higher. So now you're seeing the behavior somewhat shift. All right, there's a shift down here in this bottom. Again, really important that you see what's simple. I want to make trading simple for you. The first thing you're going to want to look for is this. Okay, try to get that going, and then get the threshold involved on the first bar that scenario presented. Okay, put that threshold there and project that forward. You'll see that the behavior is changing. Once they left this area, you're not getting any kind of buy side opportunities when it dives back into the L. When it comes back into that L, and in some instances, they're running it immediately, which proves there's something happening above here that's causing it not to be able to get back up. You see how immediately you had the L, and immediately they wiped it out. Okay, so when they lift up, just anticipate to some degree that there's enough force above you to possibly force it back over. Okay, collectively, they're coming in immediately together. Immediately together, the consecutive closes, the higher, the lower highs, all of that is happening, together. Okay, that's important. All right. So now when they get down here, it's happening together, but they're not breaking down. And with the H's showing up, they're not offering you anything. They're not offering you anything. Try to slow this stuff down. 9:30 came in the market right here. So that's 9:30 pushed down. Here's that big jump up. All right. So now I want you to see what took place here. Now this is that high. This is that high. I just projected that zone forward. They closed above it so they can go through it. So here's that same scenario. So now we got the H. They're both together. They're both together. They, of course, they made it. With the third bar being this green bar here. They pushed into the threshold of the red one. So that red H. This is the H for the 3. So if you rewind the video, we're looking for this. Okay, I don't want to have to go back all the time. We're looking for this, and then the H will pop up. And we're looking for this. Well, let me put it on the bottom here. We're looking for that for the H, and we're looking for this for the L. Okay, so we're looking for that. And all the lows have to be higher, and all the highs would have to be lower. And then we get that threshold for this bar. Okay, so now we're looking for the threshold on the first bar. I'm gonna put this here so you'll know this is what we're looking for. All right, give or take. All right, so here they pull into that threshold of that red bar. Okay, because remember the H and the C is on this bar, but we're worrying about that H. That's what we want to see. They pull into that, okay, and they're offering you rotation back down, but we have the threshold to the L. Okay, so the L is here. It came in. Once you get this green bar, red bar, green bar, and it doesn't matter the color. You just want the lows to be higher. That's it. There's that threshold projected forward. Okay, they grind up, and now they close. This is a problem right here. This right here is your problem. They closed above that threshold. Okay, they closed above the threshold. Okay, so I want to say that to you. That's a problem. You don't want these guys. Let me kind of see if I can get that out the way. You don't want them guys closing above that threshold or beneath that threshold. If they do that, they can absolutely run that turn. They can run it. And so they closed above it, still leaning, still leaning, still leaning, but yet pushing again. You had another L come in here. Okay, you had another L come in here. There's another threshold for you to reference. Okay, now the wick of this one, okay, of course, is lower, and then this wick right here, well, the low of this bar is higher. So all 3 of these is higher, so you get the L again. So now they're layering in that information. I want to make sure that you see the grind, okay? But they're going to blow this high. They're going to blow it. And they went through the high. Now, I'm not talking about trend. Of course, there's a trend here. There's a trend. There's a trend. I'm pretty certain of it. We can count the bars if you want. 1, 2, 3, 4. This is 4, 5, 6, and there's 7. There's 7. That's 7 bars. Here's a trend here. Okay, that's a trend. No prior structure break needed. All right, let me go ahead and just do this. I want to teach this stuff to you because it's really simple. Don't make this stuff hard. Please don't make it hard. Whatever you do, don't make it hard. Let me just do this. And then we're going to look at some real time, try to capture some of it. I just want to help you with your chop. So this is your trend. For those that are new, I'll do this. Trend 7. So we need 7 bars. So 7 bars closing closing higher than the prior bullish bar. Okay, so this is your trend. All right, so we got a trend set down here. All right, now you have to know if they're not going to go down, well, there's only one default move that's about to happen. They're going to go up. It's just that simple. So we had our trend set right here on this bar. So the trend set was on this bar. So I'm just kind of put this here. That's your trend bar right there for the move up. They dove down here right back into that threshold, and they did not want to break down. So they're going to do the trend distance. So the distance of this trend, you just measure it. Okay. New trader, if you're new, here you go. You measure that, and that's how far they're going to go. So they're going to go that far. And I didn't cover that down because I wanted to get to this up as far as the trend. But there's the trend up. They made the distance. Now with 930, once you get the volatility push, they pull down and then they push. Now you do this. Okay. So when they stop roughly about here and then start pulling down. You would take this distance here with the volatility push and you project this. And that's how far they'll go again. All right. So now I covered the trend. All right, so now I want you to see the behavior. Again, there's that shift. You can rewind the video. There's that shift. So you don't have to have a lot going on as far as order flow tools and stuff. You can use that stuff. Absolutely. Please use it. If it's going to help you, definitely use it. Just pair what I'm telling you with it. Just put some of this together. That's all. So you can use anything you would want to use. I just want to give you a plain chart and let you see what is available all the time with nothing on the chart. There's nothing here but the candles. And I'm just putting the text to it so you can see it a little bit better. All right, so I'm gonna open this up just a bit. I should have did that from the start, but there's that threshold. All right, so there's that threshold. They pulled into it, pulled into that one, got above it. That's bad. Lean back into this one, gave you another L. So there's another L here. Climb right through that high. Not offering you anything on this short. Now here's that thing again. They pushed through the high, but they didn't close above that threshold. Okay, so that's not fun. Pushed down, came up right back up here. Okay, now there's a threshold on this big red bar. Close to this one though. It's close to this one, but there's a threshold here. They pulled into it, pushed down, didn't want to close beneath the threshold of this green bar. Now you have the L. So the L comes in when the red bar finished. So when this red bar finished, the L pops up. Project that forward as well. Project that forward as well. They closed above the threshold of this big red bar. That's a problem. They lean over. I understand that. I absolutely get it. This threshold is important. This one is important. This one is important. So they're layering it in for you. They're putting the information right there for you, even though it's whippy, even though it's back and forth. They fall down again. Now, here I put a red zone only because your H came in on this bar here. So you had 1, 2, 3. They push right into that zone and then they decline. All right, so that's the only reason why I put that red zone there. But I know this is the problem. They can get through the high. Okay, but I did want you to see there was a reaction to that H. It was. They pulled into it here on this bar here, and they gave you a quick push to the downside. But they're not closing beneath this zone, much less this one or this one. And there's your push to the upside. There's your push to the upside. Now, I stopped marking the chart here because I wanted to record this video for you. So now let's take a look at some of this real time, and we can take a look at a little bit of the indicators too. I don't mind doing that, but I want to try to put in front of you the plain chart. Let's just do these charts. Let's just do this. We don't have to have a lot of indicators, but if you want to see just some of the indicators, you can. Here you go. All right, so I coded your fair value gap stuff. I know a lot of people like that. I coded that for you. That's in there if you want to use that information. I got other indicators up here if you want to use that information. No static levels. You're always trying to get to the 55. Your clusters are your 25, your 15, your 85, and your 95. And the ranges that's here is the 615 to 745 and the 1215 to the 145. All right, so that's that information there. Now, when it comes to where the bar, I'll put the map on this chart and you can look at the map. Okay. Again, loads of indicators that you can have, loads of them. All right. So let me put the map up here. You may find that of some interest while I'm talking to you about CHOP. It could help you as well. Just put this map up here. Hurry up and load, please. And I have off to the right-hand side the 1 second and the 1 minute, 1 minute and 1 second chart. Come on, this thing takes forever to load this. All right, here we go. All right, so here we go. So yeah, it's 12:07. There's the clock there. Now, the zone that I put up here, I'll just tell you about that really quickly, and then I'm gonna get off here. The zone here is giving you probability. That's all it's doing. It's telling you, hey, based on what the market just offered, as far as the movement itself, is giving you probability. They won't close outside of this zone. They won't close outside of it. In most cases, they won't close outside of that zone. Most cases. Should they do that? That's really significant, really important if they could get that done. Really important. But oftentimes they won't close outside the zone. All right. And that's the map. That's the DTT map. All right. Now, all right. So they didn't close outside the zone. Here come your rotation. And again, I told you that the bars will give you the wick zone. This is the wick zone. So let's see if it'll just wick into those lines there and kind of push up. And so I'm trying to tell you what your bar can look like. That's all. I'm trying to tell you what your bar can look like. You get the wick zone on the bar. Remember, the bar has a threshold. And I'm not leaving you with just that information. I'm trying to tell you where your bar can potentially close by providing you the map. The DTT map would absolutely tell you there's a good chance that your bar will not close outside of this zone. I've been trading professionally for a very long time, so I want to provide you some information that can add a lot of clarity to your trading. Just really, really simple stuff that can get you where you want to go. And vice versa. It's not going to close outside of this zone as well. It offers you both sides of what potentially statistically what can be done. And that's really simple. Now, you saw them drive into this threshold, but then they, of course, turned the information around and came back this way, but they didn't close outside the zone. Now, we may be setting this up to get, let's do this. We may be setting it up to get that. Okay. All right. So that low, okay, that low, well, I'm sorry, that high is coming in fairly low. Okay. So you can get a jump start on the information that I was going over with that the higher lows and the lower highs. You can get a jump start on it if the separation, if you will, is, of course, there. If that's there, you can get a jump start potentially on it. Okay, that's really significant. Now, let's take a look at here. Again, they're not closing outside of that zone. Really, really important. So that could help you when it comes to overlap, when it comes to chop. Okay, a lot of people, they like to reference the market in terms that I think could potentially cause you not to see what's available. Your target may just be a little further out than what's okay. So this won't show up because they just did that. Okay, so that's not going to show up. Now, potentially, it can show up in this direction. Okay, so potentially you may get it like this. Okay, it may be this, where this side of it may offer it to you. Okay, maybe that, maybe. All right, so, but the terms can cause problems in the trader's mind. I want to say that because what we're doing, this is a decision place. I want to say that to you. This is a decision place. Even though you have the open, high, lows, and close, if you interpret it as, hey, it's chopping, you can almost think that there's no opportunities. The opportunities is based on rotation and you being able to interpret what the rotation would look like. So how far is it that the market may potentially trade and then, of course, revert? There's a reversion aspect of this because you have reversion algos. And so how far will the market trade in a particular direction before it rotates? And so when you look at the threshold aspect of it, and then let me see if I grab this high 97.75, high here 96. So they came in lower. So they came in lower than that information there. Let's just check this really quickly here. Yeah, so they came in lower. So it may show up here. Okay, so that scenario still may show up, but just on this side of it. Now, remember I told you the sooner the better. Okay, they set the turn here. It could possibly show up over here, but the sooner the better. It would just be much more appreciated. That's all. Just I would like to see it show up the sooner the better. And again, here's that same scenario where they did not close outside of that threshold. They can trade outside of it. No, they're not offering it because they just broke that high. So it's the same thing. They can trade outside of the map, but statistically they will not close. And this is the market providing me this information, letting me know that this is what they just presented to you, and it should still serve relative moving forward. That's really important that you get that. Now, should they close outside the zone, that's significant. I want to go ahead and tell you that. So when you look at the activity, from this morning. All right, so when you look at it, I'm gonna just kind of bring this into view so you can see it. And again, you can see if they'll close outside the zone. I doubt that they will. When you look at the shift, there was a shift here. Okay, there was a shift here. There's not a downtrend here. There's not a downtrend here. All you have is an uptrend. So there's not a downtrend here. See, they did not close outside the zone. So all you would do is go for that same distance. So 1, 2, they all have to be lower. 3, 4, 5, that's 6. That's not 7. You're going for that distance all over again. Really simple stuff. But when the H shows up or the L shows up, you want to try to get that threshold of the green bar. Here's the green bar here. I know they set the low here, and so that zone is there. The L came in kind of late, kind of late it came in, but you got a small rotation off of that L. So the L is here. They pulled into it. You got a small rotation. The L is here. Okay, so the L is here. They just couldn't make it. Okay, so you had the H here that came in on this bar here. Okay, now this can be a little tricky because now you're putting that information, side by side, so it can get a little tricky. So you're just projecting this forward for that L here. You're projecting that forward. Kind of the same thing. It's on the same price level. That's all. It's on the same price level. And then of course with that H there, it's kind of the same thing, just a slight margin of difference. And they actually offered you a little bit here. So they offered you a little bit here. Okay, let's kind of color this here. Try to get you an idea of how to look at chop, how to get an idea of what it is that they can do within the span of your target. So how soon would you like to exit the trade with a potential gain? Okay, so these three here, they pulled into it and they offered higher. Okay, so they offered higher here. It's a very tight window. And that's why I say the market is always trending because there's an opportunity there. It's just, can you exit the trade before the rotation come back and go ahead and of course, remove you from the trade itself. Here's another opportunity where it fed down to the downside to give you potential gains. Now, I don't want to outline too many of them, but again, here's another scenario here. Okay, and again, this is not a downtrend, so you can't expect it to stay down until they close beneath it there, so they can break that low, and they did. They punched that low, and then they came back with the L, and that's here. Okay, so that's here. They came back with it, and of course, this just overlap right in that scenario, and they took off. All right, so they got stuck right between here, even though they were overshooting that high. They got stuck there until they got outside of it there. All right, so I hope that this has been tremendously helpful to you. I hope so, because this right here in itself should be able to cause you to operate on extremes or have your target proportionate to the activity. You got to make sure you pay attention to what they're doing when the price becomes really compressed. Okay, I want to make sure that the reference points are really in front of you, because although the activity is whipping and the range seems really tight, I don't want you to interpret chop as no opportunity. Oh, it's opportunity. You have to know where it is that you need to be into the position, and of course coming out of it before of course the rotation begins to ping you out of the activity. All right, so that's my time with you. I wish you all the best with your trading. Take